Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I will be speaking about gold because at the moment we do have quite interesting price action and structure. Now, starting here from the monthly time frame, what do we see? Now, here in the monthly, we can see how the market from a monthly perspective has just shifted from creating lower lows to now creating higher lows. And in fact, after that, the market created this quite strong push to the upside that has led the market now to test the previous all-time high. Now, as we're testing this area of resistance, obviously there will be some weakness in the market, and we already see that with the creation of this wick. However, in creating this wick, the market has also printed a candle with a very long wick, which we have already said, but also a green body. Now, usually when you see the market create a candle like this, so a candle with a long wick and a green body, usually what you will see is the next candle fill in this wick. Now, if you're asking yourself, why is that? That is because the creation of a candle like this from a monthly perspective usually indicates that on the weekly, you actually have an impulse and a correction in which the correction is exactly the wick that we see here on the monthly. And after this, you usually get the continuation to the upside for the completion of the impulse correction and impulse pattern to the upside. And this continuation from a weekly perspective is exactly the next monthly candle, which is supposed to fill in the wick. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see how we have just tested exactly the previous weekly resistance, which is now turned support here, because as you know in the market, when you have a level of previous resistance and that previous resistance gets broken to the upside, after the break on the retest of the previous resistance turns support, you expect a rejection to the upside, possibly for the creation of a new higher high. We also know that if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market has just tested exactly the 0.786 Fibonacci retracement before then starting this rejection to the upside. So also here in the weekly, everything seems pretty bullish. Dropping down on the daily, what do we see? Now here in the daily time frame, first of all, we spoke about gold when the market was around this area. I explained all the reasons for which we did expect a potential rejection higher. Then the market printed this W formation here, and after the creation of this W, I made a full breakdown explaining all the reasons for which we wanted to see the market start a move to the downside to go and complete the pattern at the previous resistance turn support, which we can see in fact that the market has just created that move. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, at the moment we can see that in creating this move to the downside, the market has also started to create this M pattern. And in general, after the creation of an M pattern, what you expect is the market to create a move to the upside to go and complete the pattern itself at the previous support turn resistance. So from a daily perspective, what we expect is possibly a little bit more continuation to the downside, and then we expect a potential rejection higher to complete the pattern, which means that there is a potential short-term longing opportunity back up to the neckline of the pattern. Now, if we go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for gold, What we can see here is that with the last reports, net positions have been increasing. In fact, what happened here is that we went from having 172k net positions all the way up to having 254k net positions with 338k longs at the moment and only 83k shorts, with 13.5k longs added from an institutional perspective with the last report. Therefore, overall at the moment, everything is looking pretty bullish for gold. So how we could be approaching this potential short-term longing opportunity here? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for this potential move to the upside and completion at the neckline. Now, if you do know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.